Well, we are here. Welcome, guys. Welcome. Market Monday. Wasn't sure if we were going to be able to get on for a second there, but technology came through for us. Thank you guys for joining me tonight. Of course, you can see I am in a different environment. I was actually in this room for our Word on Investing Summit last week. For those of you who were there, thank you so much for joining us this last week. We had 3 amazing days for that Word on Investing Summit. I mentioned it last week on Thursday's broadcast. We had some industry leaders, we had business experts, we had motivational speakers, getting you to know what to do, how to do it, giving you the energy to do it. That's what the Word on Investing podcast is all about. Of course, we did the summit, and you would have seen that I was in this room as well. We're doing a little bit of renovations over at the studio. So you're joining me here in the Tradeway offices, actually, with COVID-19 and everything that happened last year. We've shifted everything that we're doing. We're not in this office so much, but I used to spend every day in here helping folks at Tradeway and working with the team. Of course, we can see, of course, beautiful New York City, Manhattan behind me here as well. So I'm always happy to have that in view. Jeffrey, of course, is giving us the weather report today. It's Jeffrey, the weatherman. As I said, I was going to start calling you that. Howdy, 73 and partly cloudy. We're getting into the 80s here in Texas, man. We're on the tipping point. You can tell we are on the tipping point. It's about to get hot, and it's going to be hot for a long time. But you know what? It's been an extended spring. I'm pretty happy about that. How are you guys doing tonight? So glad to have everybody out there. Some of you, of course, are joining us on the recordings. Hello to those who are live, Facebook Live, YouTube Live, and then, of course, for the many of you who come back and enjoy us on the recordings as well, good evening to you. Good morning to you, wherever you're watching this. Happy to have you on here. Market Monday this week. We're going to just kind of come around to the heart of Market Monday today. I want to actually look at the market, not something that we do every week, right? We get different aspects of the market to focus on, different things that I want to make sure you guys understand to help you have confidence and clarity as you are starting your journey in trading or perhaps continuing your journey in trading. But we haven't come back and just looked at the market itself for a little while. So we're going to do that today, okay? We're going to take a look at the S&P 500 chart, and I'm going to go ahead and just give you some of my thoughts on what is going on there. This, of course, is one of the benefits of those who are in our programs. You get access to multiple coaches, not just myself, but multiple coaches giving you updates every day through the day as the market is going through the motions that it does each day. Wouldn't that be such an awesome thing to have somebody that you could kind of walk through as you're going through the day? That is something that we do. Tonight, I get to do that with you, of course, after market hours. Before I do that, I always say this. I want to let you guys know that you can comment, you can interact, you can ask me questions. You can let me know what the weather is in Colorado if you want to, right? You can let me know what the weather is or what's going on wherever you are. If you have a question that is related to money, okay? Money, finances. If you have something regarding the material we are covering, or perhaps in another area of stocks, finance, whatever the case might be, please feel free, drop it into the comments, right? Right over here on my screen, you can say hello, ask a question. I love the interaction. Actually, as soon as I get off this broadcast, Tradeway is going to start their weekly Monday night, what we call study groups. We're going to be looking at the stock strategy. We're going to be looking at the option strategy. We're going to look at credit spreads. We're going to look at debit spreads, and we're going to do a different webinar for each of them. So we're going to get lots of time for me to interact with students and students to interact with me as well as another coach. And that is one of the most important things that we can do learning in this journey. Right here, you have an opportunity to do that, right? We get a couple opportunities every week, you and I, to do that. So I invite you to do that. Nancy, I see you there as well. Hello to you. If you're on tonight and you've never said hello, I just want to challenge you, invite you maybe is a better way to say that. I want to invite you. Go ahead, say hi. Let me know where you're at and ask me some questions if you want to know. This is a great opportunity because I'm going to dive right into this stuff here. Listen. I want you guys to be ready, okay? And I mean this, I want you guys to be ready for tonight, because tonight I am going to move through some things that if you listen to a Tradeway coach, if you read any of our updates, if you're in a space where you're going, I want to learn more about the markets, then this is for you. You say, I want to learn to take risk with my money, but I want to make sure that it is measured risk, right? Not just any risk. I always say trading's not guessing, gambling, or going for it, right? You guys have heard me say that. Is there risk in those things? Yes, there is. So I don't want to do that, but that doesn't mean I want no risk, right? We have to take risk. And of course, I'm being very simple here. What we want to do is understand, well, what are the big risks? Okay, so let me go ahead and pull up the S&P 500 chart here for us. And I want to show you some things that, again, if you followed any of us coaches here at Tradeway or had interacted with an update that we would do for you guys of any kind, like I said, on the study groups tonight or any of our membership sites, anything like that, there's a few key things we're going to talk about when it comes to the market. Okay, but those things take a little bit of work, a little bit of definition to understand. Guess what? I am going to help you understand those things tonight. And I'm going to tell you what they are right now, okay? Because this week in the stock market is a it is a very unique week, okay? There is a lot happening. The market's almost always open Monday through Friday, right? So that's not abnormal. That's, of course, a normal week. Sometimes prices are volatile. Sometimes they're not. Sometimes the S&P is in a pattern. Sometimes it's not. We help you understand. Sometimes we're in what we call a squirrel market. Very hard to know what the market is doing because it's not in a pattern, okay? We help you understand that. But this week is actually not any of those things, at least not so far, okay? This week is really going to be three things, okay? If you're note takers, you know I like to say this. These are the three things you want to write down because I want to give you a better understanding tonight of these three things. And I believe that if you have a better understanding of these three things, then you're better equipped. That's what I'm looking for. You're better equipped to be able to manage the risk that's coming this week. Why? Because you know what to watch for. Okay, you know what to watch for. Good. I see this. Engineering innovations. Look at this, guys. Colorado weather. Good at this minute. Tomorrow? That's up in the air. I'm sure you guys know the saying, if you don't like the weather, wait 15 minutes, right? Wait 5 minutes, wait a day. That sounds about right. Patricia, working with the Tradeway coaches, thank you so much for that. Mario, enjoyed the session I did on the Word on Investing Summit. As I mentioned, I was on that summit this week, and a lot of us got to be on there. So thank you guys so much for being on that. I enjoyed the session as well. Thank you for that, Mario. Okay, so here's those three things I said I was going to give them to you. Here they are coming up this week. Actually, before I say that, let me make good on my promise there and actually share the screen I said I was going to share. Okay. So now you can see that. Nice rolling stock there, made it up to resistance today. The three things that I want you guys to understand makes this as I said, unique week in the markets is number one, earnings. Okay, now earnings is a season. I'm going to talk more about this in a minute. But this week in particular is the majority of earnings reports that are going to come out, right? Company earnings reports. You say, Blair, I don't even know what you're talking about. I will get to that in a second. But the majority of these reports are going to come out this week. Okay, this week alone is going to be very, very heavy with earnings reports. And as traders, that is something we need to have an understanding. What am I talking about? And why does that matter to me as a trader? Okay, earnings. What am I talking about? Why does that matter to me as a trader? I'm going to help you understand that and give you a little bit some tips and tricks as well to know what's going on in a really simple and easy way. So that'll be a good thing for you guys to have. Got to stay tuned for that. We'll get into that in a minute. The second thing is, and the students who've been around for a little while know this, we talk about the Fed, okay, which is really the Federal Reserve. We're talking about their Federal Reserve. The Federal Reserve is essentially the central bank in our government, okay? It's the central bank, and they are going to be having a special meeting this week. They're going to be making some statements on Wednesday. I'm going to help you understand what does that even mean. Maybe you've never even heard what I just said before, but when it comes to Wall Street, listen, if you're a long-term investor, if you're a short-term trader, you want to understand what is happening with what I'm going to call from here on out the Fed, okay? When you read articles, if you hear it in the news, they're going to call it the Fed 9 times out of 10. That's the phrase they're going to use. That's the Fed. So I'm going to use that phrase as well. They're having a meeting. I want you to understand what that is. And again, how does that impact you? What good is this if I don't explain how it impacts you as a trader and how that means you could have an understanding of how to control risk as you are trading positions, whether you're in a short-term or in a long-term position. Of course, those would be a little bit different, but I'm going to talk about that as well. And then last, but certainly not least, I want to talk about something that was newsworthy, really came out this last week, but I want to give an update tonight because we actually talked about taxes very recently on the Stock Talk Thursday. Okay, we talked about, actually, you know, it might have been on the last Market Monday. Now I'm getting those mixed up. But we talked about taxes. We talked specifically about trading and taxes. Well, there was some pretty big news that the president released regarding what we talked about, the long-term capital gains rate. Okay, that long-term rate, there's a proposal to change that rate that I told you, right? It hasn't changed yet. But I told you that just recently, there's a proposal to pretty radically, as I said, change that rate. And that would have pretty big tax implications for some people. But does it change anything for you? Well, we're going to update on that as well. So we got a lot of ground to cover tonight. Earnings, the Fed, and then some news from the White House on capital gains tax rates, okay? The kind of tax that folks have to pay when they realize gains from their stock investments. Okay, so we're going to cover some of those ground, but first of all, let's get over to the S&P 500. I want you to see the lines that I have on this chart and where we are at. So we have been in this pattern. You guys have seen this. Okay, we have, I'm going to just make a little change on my end. We've seen this for quite some time. Now I changed some of the lines here. I changed the slope. We were locked in this range for quite a while, right? Right around this 20-day moving average. We went up and down, and then we got into some volatility here when the tech industry rolled over, and then we recovered beautifully off the 50, and we've talked about that on here as well. So I put these lines in here, and we finally saw the market pull back. Look at this in here. Bounces at the 50-day, 1 day, pretty much sideways, but that was a small pullback that day. Let me go ahead and zoom this in for you guys a little bit better. Okay. I like to have 6 to 7 months on the screen when I'm starting, but I'll zoom in from there. So we've got this day here. It was at one point pulling back. Okay. Didn't even get to the 10-day, that red line. Up it goes. This day was basically sideways. And then we got a little bit of a move back here to that moving average. You see that purple line right there, okay? You say, Blair, what are the moving averages? I don't understand what you mean. We've actually looked at the moving averages in previous episodes, so you can always go back and watch the catalog that we've watched in the past. I say that every single week because I just want to make sure folks understand that they can go back and watch those episodes as well. We have covered that. And then, of course, we extensively teach how do you make these lines work for you if, inside the membership programs that we have. So it goes up and it hits that line. Finally, after all of this growth, we get a pullback. But it's not magic. If you drew these lines off the tops, now you see there's a few that were kind of moving through, right? They busted above the line I have here, but it's the top of this body here. It's the majority of the tops there, right? It's this guy here. It's these two here, right? It's this wick here, which again, that one popped above, but I put it below that level because it lined up better with this information back here. And it goes up, and that provided resistance. Now, this isn't about prediction, and you can see, let's be real here. Let's zoom this right in. Did that hit exactly on my line? No, it was just shy. Now, you guys have seen me do something on here before. I'm not going to review this too deeply tonight, but I like to do this, right? I like to have what's called a trading line on there. I just put a little bit of space. Support and resistance are an area, not usually just a price, just one specific price in these patterns. So I like to put that on there as well. So we knew it was getting into a resistance area. Now, it had been very hot, okay? But we at least had that information to go on. And of course, the market pulled back from there. Now, it didn't pull back very far. Two reasons. One, it stopped at this 10-day, this red moving average stops at the red moving average, right? That's the 10-day. And what did we have back here? We had support at that level for a long time, right? Many times the stock tested that level and moved back up. Even over here where it failed, it stopped there first and then broke through. And sometimes it actually used that as resistance as well. Old support becomes new resistance. We see that happen all the time, okay? Then it's able to move up here, break through those lines, stops, rallies on. We went down, up, right? And today we got a gap up, pretty darn close to those all-time highs, not quite. The high today was 41.94.19. And then right here, we actually made a 2-penny all-time high. I didn't see that already. So 41.94.17 on Friday, 41.94.19. So barely making a new high today, but closed below that. So we just went along that line. And so we've had students who were watching at the 10-day moving average to initiate short-term, right? Not day trading, but short-term trades based on that 10-day, but also based on the fact that the S&P is in a range that it was in for quite some time last year, okay? So this is how we use patterns. Now, I moved pretty quickly there. We've got some other stuff we've got to get to, but this is how we use patterns, okay? I'm going to go ahead and stop the screen share. Make sure we don't have any. When meeting your parents, I call moving into a resistance area. Yeah, yes, I see the comment, Jeffrey. Okay. Earnings. Who out there knows? Give me a couple people out there, just give me a very short definition in the comments. Hey, what is earnings? Tell me what do I mean when I say earnings when it comes to the stock market? Earnings. Let's get a little bit of interaction on that. I know it's a little delayed, but I want to know kind of where we're at with the idea of earnings. Most of us have heard of it. We've seen something on the news, or we've heard about it, read it perhaps in the newspaper. If anybody out there even reads the newspaper anymore, I'm not really sure. This is not product placement. Just ignore that. All right. Okay, so earnings. What is earnings? Well, earnings in some ways is a little bit self-explanatory, isn't it? Because, well, we must be talking about some kind of money, right? Some kind of revenue, or these companies are reporting earnings. How much did they make? So there's a lot more to it than that. We're not going to deep dive too far into specifically all the information we get in earnings. But all you and I need to know right now is that a publicly traded company, which is a company that we're able to buy and sell their stock, okay, a publicly traded company is going to be required to report their earnings one time every quarter, 4 times a year. One time every quarter, 4 times per year, right? That's why it's quarterly earnings reports. So they've got to report their earnings, and they're going to give us all kinds of stuff, right? They're going to tell us all kinds of numbers Here's how much we spent. Here's how much we made. If we're Netflix, we're going to give some key things like, here's how many subscribers we gained. Here's how many subscribers we lost. Any major announcements, we're going to up the price of our subscription. We're going to expand into, India and China like never before. So we're getting specific numbers, but we're also getting strategy and reports. And investors on Wall Street are watching. They are watching these earnings reports because they want to know, is the money I was thinking about putting into the company, is it worth putting it in? In other words, is this company a good star to hitch my wagon to, right? Do I want to grab onto this thing because do I think it's going up or it's going down? Are they losing money? Are they making money? That's if somebody is looking to put money into a stock. Let's say it's Disney. But somebody else might already have money in Disney. And they're saying, does this report that you're giving me justify the amount that you are charging per share, essentially, right? Whatever the market price is for the share of Disney, the earnings report is going to oppose or support that market price, right? If Disney's trading at $120 and the earnings report, it's not right at $120, by the way, I'm just pulling that number out. But if it's at $120, to use an easy number, and the earnings report is really bad, it's not going to stay at 120. It's going to drop. It could drop pretty significantly, right? Just like that. If it's really, really good, the earnings report that is, then the stock might jump because somebody might say, well, Disney's doing even better than we thought. So we ought to pay more for these shares. The demand's going to go up. We ought to pay more for these shares than $120, right? So it might jump up to 140. Then again, like I said, it may jump down to 100. So as traders, you start to see how important it is. An earnings report can have a pretty big effect on investors' perception of that stock. And if that's true, then it can change the price of the stock, not only dramatically, but quickly, very quickly, the day of the earnings report. Now, a company is going to report before the bell, we call it, or after the bell, okay? Before the bell or after. So today, being Monday, some companies reported before Wall Street actually opened up for live trading, right? There are pre-market and post-market trading hours, but we're not going to worry about that right now. For you and I, it's going to be 8:30 Central Standard Time to 3 p.m. in the afternoon Central Standard Time, right? That's the trading hours. So before 8:30, they report earnings, but some right after the bell at 3, they will report earnings, okay? So that's when they come out. So if you and I are in a position, right, a trade on Disney, and the earnings report is this afternoon, how are you and I going to manage the risk of what might happen in that trade if earnings is this afternoon? Okay? Well, there's two things I want you to know here. Number one, at Tradeway, we teach our students when it comes to short-term trading, that's 3 days to 3 weeks, we do not stay in a trade over earnings, okay? Unless you have a very specific skill set that teaches you how to trade an earnings report, then we do not stay in after or during earnings, I should say, right? That's when we're getting into the gambling, right? It could go big, it could go hard, down. So we don't do that, okay? That's number one. But the big thing I also want to say is a quarter, so far this year, right? A quarter of the S&P 500 companies, 505 companies in the S&P 500, it's not the S&P 505, a quarter of them have already reported quarterly earnings, okay? And of those that have already reported, 84% of them have delivered earnings that beat Wall Street's estimates. So anytime a company, let's go back to Disney, anytime a company is going to report earnings, there's all kinds of analysts on Wall Street, right? Firms that analyze stocks, banks, they're going to look at stocks. They're going to do all kinds of math and all kinds of complicated fundamental calculations. You and I don't even need to know this stuff right now. We don't need to know this stuff at all. We do need to understand that these analysts are watching. And when the stock's earnings report actually beats the expectations that these analysts have, that can be a very positive thing for the stock, okay? We thought Disney was going to make this much, but they actually made this much. The share price has a very high potential that it's going to move up quickly as a result of doing that. So 84% so far of those reported have beat estimates. What does that mean for you and I as traders? It means Wall Street has got their eyeballs on the economy, right? They're the big money movers, and they want to know that the future looks bright, because if they're going to plant their seed into the ground of this economy on Wall Street, right, they're going to put it into these companies. They want to know, hey, these companies are looking like they are growing. They are going. And this is something that I want to, again, hitch my wagon to that star, if you will, right? If they're not doing well, then we're going to be more conservative. We're not going to put so much money in the market. In fact, we might be taking some money out of the market. That's going to be bearish if that happens. But 84% have topped the earnings estimates. That is positive. Does it mean that the market's just going to go to the moon right now? We'll have to wait and see where it goes. But it definitely bodes well for the bulls on Wall Street if that continues. So that brings us to this week. This week is a lot of earnings reports. In fact, a third of the S&P 500 will report earnings just this week. So there's going to be earnings reports coming before and after the bell like crazy. And what Wall Street is going to be watching is if we can continue to top those estimates, right? That's what we want to see happen. That's going to create potential anyway. We'll see what happens, but it's likely to create bullish sentiment, right? Buying pressure on Wall Street to drive stocks up. You know, if a company comes out and reports stellar earnings, okay, and great revenue and good strategy and strong leadership and all these things, then there is a high likelihood that those stocks are going to continue to perform well. So here's something I want to say. I see now a call to report profits for the quarter. That's true, Jeffrey. Mario says company reports their quarterly earnings. That's also true. Company reporting on income. So most of the focus that you guys said, which is correct, is that we're talking about revenue. Now they're going to talk about other things. And this is the thing I want to say about earnings. We don't ever encourage people to guess or gamble on earnings. You say, well, it's Apple. Apple is a great company, man. So if Apple's going to have earnings, it got to go up. So I should just buy it beforehand because it's probably just going to gap up. Well, my answer to that is maybe, maybe not, right? Maybe not. I heard I hesitate for a second. You know, I've told you guys before, you know, we don't give specific testimonies here, but I read an article about an investor who put a very, very large amount of money in a highly, highly speculative position, meaning a high risk position, more of a gamble than anything. And it paid off handsomely for this particular individual. But when I read the article, I thought to myself, well, that's one person who did that. But how many thousands of people or more bet the kind of money this individual did? It was close to $200,000 on a single position and lost it all, right? Those are the articles they don't post. So when we bet or we gamble on earnings, you can think, well, Apple's going to go up. But guess what? I've seen Apple beat on earnings, right? They made more than they thought they were going to make. They expanded. But then guess what? They sold less iPhones than Wall Street thought. And because of that one thing, the stock went down. So you don't know. I don't know, right? It's a gamble. Okay, it's a gamble. So we don't do that. What's an easy way that you could, I'm going to pop it right. Let me do it this way. I like this one. I'm going to share my screen. Here's an easy way that you can see what earnings reports are coming up. If you guys don't know this already, I want to show this to you really quick. This is earningswhispers.com. So if you're looking to get into a trade and you don't know does this stock have earnings? You can go over to this site. I'll show you very quickly. I'm not going to go into a lot on the site here, but it's going to give you a calendar right here. So if I clicked on that, it's going to pull up an earnings calendar. I can also go over here to the ticker. I can just type in AAPL. That's 3 A's. Okay, AAPL. There's Apple pops up right there. I could just click on that, or I could just click on this right here, right? So let's go ahead and, oops, that's not what I wanted to do. There's the earnings calendar, okay? Tesla reported today, okay? So here's the estimate that they were going to earn. Here's what they actually earned, and so on. I don't expect you guys to go in and necessarily understand all the different numbers and all that. You don't need to do that, okay? You don't need to do that. We just want to know, what's the date? That's all we want to know. Is there a check mark, and what's the date? Now, these ones have passed. So let's go over and just take a look at Thursday. So here's Thursday. So Domino's Pizza is going to report at 7:30 a.m. on Thursday. Okay, so if I'm going to trade Domino's Pizza, I want to make sure that I am out of that by the time they report earnings. Okay, now obviously there are other reasons why I would want to get in. I wouldn't just go get in for no reason, but I would want to know where earnings is at. So lots of earnings. And as a whole, Market Tone, Market Monday, Market Tone is going to be fixated on this week, or fixated this week on where are we really at. Remember I said 84% so far of the S&P 500 that's reported has beat earnings estimates. Is that going to continue? Do we have any questions out there? Now is the time. Pop those in the comment there. I'm going pretty fast. I know we're actually looking like we're going to be a little tight on time because I want to get through a lot today. So we're going to move on from earnings. But if you got some questions in there, just know every company is required to report earnings. It's going to happen once a quarter. I showed you how you can check the date. We never stay in earnings if we're in a trade. Now, that doesn't mean I'm going to get out of any investments that I have that are long-term just because of earnings. Okay, now that's different. Remember, we're talking about trading here as opposed to investing. Two different skill sets. We talk about both at Tradeway, but primarily here on Market Monday, in fact, almost entirely here on Market Monday, we talk about trading 3 days to 3 weeks. We're not day trading, but we're also not doing the long-term buy and hold investing. If we are doing that, then we would not get out just because it's earnings, right? We're looking to hold a company for a long time, right? So we would not be jumping out every time there is earnings, most likely. Okay, so next up is you know what? I'm going to call an audible here tonight, guys. I'm going to jump on over. I want to talk a little bit about what I said about the tax update, okay? I want to talk about the Fed, but I want to make sure we can get a good amount of time on that. So I'll just give you a little update of what's coming, and we may actually pick this up on Thursday or even next week. We'll let you guys know in the titles for the upcoming episodes. But I want to spend some time on the Fed, and I think we're probably going to run out of time tonight. We'll see. So let me just give you a couple of important things that are coming up this week, and then I'm going to explain more about the Fed another time. There is a meeting this week. Okay, there's a meeting this week where the Fed, okay, is going to get together. They are going to have a meeting on Tuesday and Wednesday. And that whole meeting, okay, remember I said this is the central bank, okay? I'm just going to dive into this anyway. Who out there just wants me to just dive in right now anyway? Hopefully everybody out there does, right? Hopefully you guys are interested in knowing what this is. Again, why does this help you? This isn't just, money talk for money talk's sake. Ultimately, these are the news stories that affect our economy. And if they affect our economy, they affect the market. And instead of feeling like you need to get bogged down in all this confusing financial data, even just saying the words financial data can be so boring for so many of us, right? But what's exciting is understanding the market and how to trade the market. That's exciting. And so with earnings, I just want you to know that affects the market, right? We've got to have an understanding of how to stay on top of that. Also, the Fed, there will be a statement released at 2 p.m., okay, this Wednesday. That's going to be Eastern time. 2 p.m. this Wednesday, they will release a statement. I promise you, Wall Street will be watching the wording of that statement. Now, let me just give you maybe a shortened version of what we're talking about with the Fed. So you understand there's a meeting and there is a report coming out at 2 p.m. on Wednesday. Sometimes that has a massive effect on the market for that day. Sometimes beyond that day, but usually mostly that day. And sometimes, honestly, it doesn't affect the market at all, because much like an earnings report, the language of that statement sometimes is exactly in line with what Wall Street expected, and sometimes it's not. Sometimes it's a surprise, okay? Wall Street adjusts prices when there are surprises. If things are what Wall Street expected, it's already priced into the market. They've already priced it in, okay? By the time you and I get most news, Wall Street, it's old news to them. All right, that's why it's no good trading on news. But when something comes out to us the same time it does to Wall Street and it's a surprise, that can create price volatility. So you got to watch this week. That's going to be something that'll be interesting to hear them talk about. Mainly, again, this is the shortened version, the federal funds rate, okay? This is the rate. Did you know that banks, okay, banking institutions are required to hold a certain amount of reserve, a certain amount of deposits, right? For you and I to bank at, say, Chase Bank or Wells Fargo or what have you, they need to have a minimum amount of capital cash reserve on the books, essentially, but they have to keep it with the Federal Reserve. This is the way that the government ensures that banks are able to, facilitate you and I taking withdrawals from our accounts and things like that. There's a minimum amount of money. Now, there's a lot more to say about that, okay? But we don't have time to go into that, and that was beyond the point of today. But I want you to understand that they need to have this cash on hand. Well, the Fed has something called the federal funds rate, and this is the rate at which banks lend to one another overnight. Okay, all these banks that are required to keep money with the Fed, they borrow from one another, right? Sometimes one bank has a surplus, so they'll take the surplus. Now they have to meet those minimums, right? They can't lend that minimum. They have to keep that on hand, and that's in a Federal Reserve Bank. But anything above that, they can lend that. They can then lend it at a specific interest rate and charge other banks. Now, why does this matter to you and me? Some of you are maybe thinking, what is this? What matters is that rate that the government sets for them as a benchmark, right, as sort of a guide for them to charge one another, that flows down into mortgage rates, right? The prime rate, mortgage rates, interest rates, loans, credit cards. It starts changing the rates. It has a heavy influence, certainly can have a heavy influence on the rates that are changing that you and I as consumers face all the time, right? The federal funds rate is at near zero, right? It's near zero. It's at historic lows. A lot of people refinancing their homes. Mortgage rates are low. They're locking them in while they can. Why? Because if that federal funds rate starts to go up as our economy heats up, then we could see other interest rates starting to rise as well. That affects you and I as a consumer. So that federal funds rate is known as what we call a leading indicator. In other words, it's sort of like in our car, we're looking down at the dashboard, right? And it's an instrument on the dashboard that tells us something very important about what's going on under the hood, right? Is the check oil light on or is it off? We'll respond differently depending on whether it is on or off. This federal funds rate is sort of like that. Wall Street wants to watch that. So you and I understand that the Fed is going to talk about that on Wednesday. Now, nobody expects them to raise that rate this Wednesday. If they did, it would be shocking, right? It would be such a huge surprise. You would definitely see some market volatility, almost guaranteed, as a result of that. But at this point, nobody's expecting that to happen. So what did I want you to know? Earnings, number one. Number two, what is the Fed going to say? And for you and I, really, to keep it simple, we just need to understand that there'll be a report on Wednesday, at 2 p.m. This happens 8 times a year. Okay, you can Google it and you can find the schedule. It's going to happen this Wednesday. That's one of those 8 times. And Wall Street's going to be watching. Hey, are they going to soften? Are they going to move towards raising those rates? Or are they going to sound like, no, we're not even getting close to that yet? Okay. So that's something that has definitely helped students as they are trading. Now, again, if we have any questions about that, thanks. I was curious about the taxes. Are they changing short-term rates? All right. So Jeffrey took us into, should we treat the Fed? All right, let me pop this up here quick. This is good. Mario says, should we treat the Fed announcement like earnings? That's a fantastic question. So if you are already in a stock trade, okay, you're already in a stock trade, here's what I would suggest that you think about doing. I'm just thinking of a stock. Let's say you're in, let's keep using Apple, right? We've been using Apple, or Disney even today. We could use Disney. So if you're in Disney, then I'm going to make some assumptions about this, Mario, and this goes for everybody else out there. Okay, so you have a reason to be in Disney. You have a plan in Disney. You know where you got in, where you're going to get out, and where you're going to stop it out if it goes against you, right? So you've defined your risk. This is very, very important. Okay, you've got a pattern that helped you do that. Okay, so if I'm assuming those things, because that's how we get into a trade, right? We need to have those things. Then I would say when you're in the trade, you do not have to go and just jump out just because there's a Fed report. Now, there have been, in the time that I've been doing this, there have been some Fed reports that have a much more heightened chance of volatility. And therefore, the risk you take staying in is higher. Where we're at right now, I would not say that you need to go out and just jump out of your trade, right? It's still in the pattern. You still have a plan. What you can do is look specifically at the trade and go, am I profitable in this trade, right? Let's say I got in, easy numbers, at $10, and my target is $15. And this Wednesday at 1:30 p.m., half an hour before the statement comes out, we got in at 10, our target's 15, we're at $14. Now we haven't hit 15 yet, so we're not out of the trade. We're at $14. And the Fed report comes out, and it turns out it is a huge surprise. Okay, again, I don't see that happening, and I haven't seen anything from Wall Street that says that they expect that to happen. Let's just say it does, right? Because anything can happen. Somebody write that down. When you're a trader, you got to remember anything can happen. So let's say it does. Well, then the market will start to tank. Okay, it's almost guaranteed the market would start to tank, at least in the short term. I'm not saying a bear market, but in the short term, the market would move down. So then your position in Disney, it's now at $14, right? You're looking for 15. And again, I'm just making up the numbers for folks, just everybody to have simple numbers. You say, okay, if that happens, where am I going to take my profits off the table, right? What's my plan if that happens? Because I'm at 14, I'm not at 15, but I'll tell you what, for me, if it's at 14, I'm not letting it go back down to 10. I want to have a plan in mind to lock in those profits if the market rolls over, right? Meaning it just turns around and tanks, okay? It drops significantly. If that were to happen, okay, you have to know how much am I willing to give back to the market before I lock it in, okay? And you may find that there's not a lot of volatility and nothing really happens, and then you're sure glad you just didn't jump out of the stock prematurely, okay? So that's something that you could do there. I don't want anybody to feel like they have to get out Again, there have been times where I think that is more heightened in terms of a Fed announcement, but I wouldn't say that we're in that particular environment right now. I'm noticing, guys, as it gets darker outside, it's getting more yellow in our studio here tonight. This is a very interesting vibe for us here on Market Monday. And Jeffrey says, yes, anything can happen. And that's true. When you're a trader, anything can happen. That's why we've got a plan. All right. Now, I mentioned I was going to say one more thing, and it sounds like we're gonna make it to the finish line tonight, because this is a little bit shorter than the last two. So hopefully you understand earnings. I got to keep that in mind. A little bit more understanding of what earnings are, how that works, and how you can know how to check earnings. Number one. Number two, the Fed. They're going to give a report. They meet 8 times a year. And this is something that you and I can pay attention to, because it does create volatility. And eventually they will change those interest rates. And as they do that, that will affect the markets. Okay. That will affect the markets. Right now, that rate's sitting at near 0, and that's meant to heat up our economy, right? I didn't say that. When money's cheap to lend, right? It's flowing because banks don't have to pay a lot to borrow. So they can borrow and they can do things with it, and they don't have to pay a lot of interest. Why? Because that rate is really low, which then passes on to us. We tend to have lower interest rates. Now, there's some ins and outs of credit scores and things like that for us, but I mentioned mortgage rates already. Those things can be passed down. Well, then that inspires, if you will, consumers to spend. They spend. It's stimulant. Now, more money is flowing around the economy. Companies are getting revenue, right? They're making money. People are getting hired. You see how this stimulates the economy? This is just one way that we can track this, but this is why Wall Street cares about this. Now, as a trader, you don't need to know all the ins and outs of that, but I think a good rounded understanding of what we're even talking about when we say Fed, federal funds rate, interest rates is the way we'll say it a lot of time. Now you know what we mean, and ultimately you're going to have a pretty good grasp on how to interpret that as you see it in the news. That's a big one to watch. Now, number 3, this is raising the tax rate. I mentioned that we talked recently about the long-term and short-term capital gains rate. That long-term rate is actually, there's a proposal on the table. This is not passed into law. Okay, this is not into effect yet. And I'm not going to give a comprehensive political analysis on this particular proposal at this point. But because we just most recently talked about it, I wanted to bring this up again tonight, that raising the tax rate, Joe Biden is proposing that those who make $1 million or more, right? This would affect those who make $1 million or more. The short-term capital gains rate would almost double to 39.6%. Okay, depending on what you made, remember I said this on our last episode, you could pay a different long-term capital gains rate, the highest one being 20%. Well, this would move it to 39.6. There would actually be a surtax on there as well, which is something that he's doing to help fund Obamacare, and that would put it up potentially as high as 43.4%. That would be for high earners. So you'd have to be making $1 million or more, but you would be paying 43.4% on your capital gains. If you sold a stock for a profit, then sorry guys, 44% nearly in that case would be going to Uncle Sam. So that's pretty significant news. But, I'll also say, to be fair, there's some sensationalized headlines out there, and we ought to know that this is for high earners. Now, there are plenty of criticisms. I mean, first of all, those are extremely high. It's very aggressive. It's doubling the rate. But it also calls into question, how it's going to affect the markets, how it's going to affect people who are putting a lot of money into the markets. And of course, there's more thoughts and conversations and arguments happening, I should say, beyond that. So what does this mean? How is this going to play out? What do wealthy investors really have to say about this? I've certainly listened to some perspectives and comments so far. We'll have to see, but I want you guys to know this isn't necessarily applying to us who are not high earners, and then of course long-term capital gains on top of that. But for some of us, this is going to come into play. This is going to come into play, and if there's an expansion of the raising of long-term capital gains to those under $1 million, then that's going to affect more folks, certainly that are most likely joining us tonight, that you're going to have to know those changes. And there are certainly tax changes happening, but for now, looking for $1 million and more, and we're looking at a doubling of that tax rate. So there is definitely some tax hikes afoot. I think this is oversimplified for me to say I'm not a fan. We got to have a much longer conversation about that. And of course, that's just my opinion, but I am not a fan. And yet again, there's a more broad conversation to be had there about Wall Street and taxes. But there you go. There is an update on that news item. That's not necessarily still in central view when we're coming into this week. Earnings is going to be bigger than that, most likely. And the Fed report on Wednesday is going to be more than that, at least in the short term. In the long term, we're seeing a lot of aggressive policies rolling out. So for me, I've given you my short-term news items that I think we need to be paying attention to in Market Tone. This is Market Monday. I know I'm going a little bit over tonight, so I will go ahead and wrap up here. But I think in the longer term, some of these aggressive new policies, a lot of spending, it's going to take some time for that to roll into the economy. Right now, we're coming off the previous administration. We're coming off a lot of stimulus being pumped into the economy because of COVID and the COVID bills. So we really got to look a little further down the road and go, where are these economic policies really going to take us if we're aggressively spending, aggressively taxing, aggressively adding new measures and rules and regulations that in many cases are not conducive to business or keeping America competitive. I will be interested in seeing how that plays out. But that's just my opinion, ladies and gentlemen. Patricia says, thanks for the info on that. Clears a few things up. I'm glad that's exactly what I'd hoped that it would do. Well, everybody, hey, we've covered some ground today. On Market Monday. This was a phenomenal Market Monday for me. I'm very interested in this stuff. So hopefully you understand that earnings, Fed, taxes, hey, if you're going to be a trader, these are all on the table. You don't need a PhD in these things, okay? But a little bit of understanding goes a long, long way. Last thing I want to do is, as we close out with taxes, I want to make sure you guys know, I'm going to share this with you guys. There is a free webinar coming up. Okay, this is our friends over at Prime Corporate Services. We talked about entities. We talked about taxes the other week. This webinar, if you're interested in knowing how to set up your trading business as a business, understanding what these tax changes mean, understanding what the current tax system means for you as a trader, our friends over at Prime Corporate Services are experts at this, and we don't partner with just anybody. In fact, they were on our Word on Investing Summit this past weekend. So some of you had a chance to meet them. Some of you did not. Free webinar. I would highly encourage you, learn as much as you can, as fast as you can about finances. We don't need to make a god out of finances, but there's no reason why we could remain in a place where we're less educated than we could be regarding them. And of course, taxes, as I said on our previous episode, is a huge part of that. And for most folks, understanding taxes or not understanding taxes is a pretty big financial weakness. So we want to help clear that up. You can jump into that webinar. I pop the link in there for you guys, both on Facebook and YouTube. Okay, the preacher said, I don't have time to sit down and write a short letter. Well, that's me. I'm going to cut it off here, guys. Thank you so much for being on. If you know anyone who wants to watch this, if they need to hear this, then you can absolutely Send this on over to them. Make sure you like, make sure you comment, make sure you subscribe on YouTube, like on Facebook, and we'll let you know every time we're on. And we will see you guys next time. Thank you so much, and good night.